And there's a perfect example of a stock that I've been buying for years now at this point in time that reminds me very similar of Amazon. And that stock is Meta, okay? Meta is a stock that I bought on and off for years now at this point in time. Meta, I've just always looked at it as one of those stocks like, I don't really want to sell it. It's just one of those, buy, throw it into the filing cabinet, and, they got a long runway of growth ahead of that company, right? And so I've been buying Meta for years, literally for years. It just, whenever I see a, great opportunity to buy, I'll buy some more shares of Meta. And here's the deal, okay? Check this out. This is just a bunch of shares I've acquired in Meta over time, okay? I started buying the stock in the public count back in in July of 2018, right? And then I remember we had a big, huge market dip in late 2018. I got some shares for very cheap there, right? And then we got the gift of all gifts last year in regards to Meta, right? Christmas came early. I mean, that was insane. Like Meta going under 100 was ridiculous, right? And just bought up shares. So this is the way I look at a great company that has a long runway of growth ahead of it, is you buy, you throw it in the filing cabinet. If there's any major market crashes, major recessions, something that sends the whole market down huge, you go ahead, you buy more shares of that stock. But there's really no reason to try to time in and out of those and try to play that game, because with great companies like that, you own them. You don't trade them, okay? And there's, this is one of those rare companies that you can just hold for 5, 10, 15 years and be a happy camper. And any major dips you get in that stock is nothing but a gift. It is giving you free money. And you can choose to take that money, or you can choose not to take that money. Apple's been a great example of one of those stocks for the past 15 years, 20 years, really. Apple's a great example for the past 20 years of, one of those companies you've just been able to buy. And then any dip in that stock has been a great buying opportunity. And there's been a lot of them. The great financial crisis was one of those. Obviously, after Steve Jobs passed, there was a lot of worries about Apple. In 2015, 2016 there was. At the end of 2018, the Rona crash, obviously, late last year. You have some of those companies sometimes that just every dip's a buying opportunity, and that's the exact way I view Amazing's on Amazon stock, okay? Now, AI. A lot of people think of NVIDIA when you think about AI, okay? Here's what I'm here to tell you here today, okay? AWS is the most underrated AI play probably in the stock market, okay? There's no doubt about it. When I think about what AWS can do in the AI space, and when I think about how this company will benefit for years to go, in decades to go from AI, it is substantial. And I'm not just talking about with their business, right, and making better decisions, but I'm talking about running AWS and having companies make better decisions and having a lot of their, let's just call it AI products be on the Amazon cloud, okay? So I think this is just an epic opportunity. I think Amazon's one of the most forgotten AI plays in the stock market, and I think they're one of the biggest beneficiaries of AI long term. I mean, after I think about a company like NVIDIA, I start thinking about, okay, who's the second to really benefit from this? And I think about three companies come to mind, okay? These aren't the only three companies, but these three companies come to mind. Microsoft comes to mind, okay? AMD comes to mind. Let's say four companies come to mind. Palantir comes to mind, okay? And the fourth company is Amazon comes to mind. And so you just got to understand there's going to be a lot of companies that benefit huge over the coming years and decades from AI outside of just NVIDIA. NVIDIA is just the, let's call it the starter engine of this whole game. Now, if we go ahead and take a peek at Amazon's balance sheet, the thing that's incredible with Amazon is they just continue to build a fortress balance sheet here. Check this out. Total equity, if we go back to 2019 for this company, total equity was about $62 billion. Total equity, 2022, end of 2022, $146 billion for this company now at this point in time. And I believe they'll likely have a total equity of about $170 billion, roughly, at the end of this year, folks. That speaks volumes to the fortress balance sheet that Amazon's building out here. Incredible cash balances, obviously. And Amazon's slowly building into one of the best balance sheet companies in the world, right? Absolutely. And the great news for Amazon is they've built out a lot of their infrastructure. This does not mean they're not going to have to continue to spend on CapEx here and there to continue to build out their infrastructure. But I'm just telling you, the money they've spent on AWS over the years, the money they spent on their infrastructure, I'm talking, they basically built a UPS. Like basically they built their own UPS through their planes, right? Through obviously all their trucks and everything, and they built that in a matter of a few years. And when you think about their warehouse network, everything like that, like if anything, I think this company over the next few years is going to be a little light on spending on CapEx for the next few years because they spent so much, especially during Rona. Oh my gosh, the spend is ridiculous. And so now Amazon's going to be able to just stack a lot of cash over this next few years. And I mean a lot of cash. And don't be surprised if Amazon ends up having the best balance sheet in the world within 2 to 3 years. Don't be surprised. That's all I'm going to say about that. Okay. Now, I was looking over our investor report, which T-Man puts together our investor report each and every week, right? And this is a report we put out for our private group members every single Friday, right? And this gives you a ton of detail into so many different things that you want to know as an investor, what's going on out there, how to look at these things and whatnot. It's a pretty comprehensive report. We're always trying to add new stuff to it to bring out even more value on every Friday basis, right? And so I was just looking over this report here today, and I saw a few things that were very, very interesting that I want to share with you guys. VIX. You know, seeing the VIX like this just shows me, not only is there not much fear in this market right now, but it shows me that a lot of the bears have kind of given up on a lot of the scariness. And I just think we're in a really tough spot to get people scared, which you need people to be scared if you're going to spike this VIX up. The reason is, let's just think about what investors have gone through. Investors have gone through a once in 100 year Rona, which shut down the worldwide economy, and people were not sure like what companies were going to go bankrupt and how that was going to shake up. Okay, so investors have gone through that. Investors have gone through inflation that's, you know, about the highest, you know, the highest or the second highest we've seen in the past 50 to 100 years in the United States of America. That was a dramatic event to go through. Investors have been through a Fed that went from full go, you know, pumping money, rates at zero, to full on the brakes, all in a matter of a year, right? Which was crazy to go through. The investors went through earnings and revenues that were skyrocketing in 2021 to all of a sudden like tanking or staying flat, and that was a complete surprise because that changes the whole way you got to do your valuations. Investors have been through so much now that our tolerance to get us scared, it's going to need to be a lot because of how many dramatic things. We got, obviously, Russia, Ukraine. We haven't seen something like that happen in how long? Have we seen, I mean, since WW2, like in terms of, you know, two major countries in Europe having something like that happen? Come on. So we've been through so much. Our tolerance to get us really scared, like, oh my gosh, and to get this VIX to spike is tough right now. It's really, really tough because of what we've been through. And so in order to get this VIX to spike, and never mind that, we had to go through peak bear sentiment in 2022 when it seemed like everybody was bearish. Every time you'd go on social media, Twitter, every time you go on YouTube, it was nothing but bear posts on why the stock market was going to crash, and it was going to be worse than the great financial crisis, and it was going to be worse than the Great Depression, and we're going to go to S&P 3000 and 2800 and all these sorts of things. And everybody was putting flames in their thumbnails and all that stuff. We had to go through all that, right? So to get us scared now, it's a challenge. It's a challenge because we've been through so much. We've been through so much. The ones that, you know, have been through this market over the years, right? And so that's kind of where we're at now at this point in time, right? And so if you're going to talk about spiking this VIX, you're going to need some crazy, scary stuff to come out of nowhere that takes everybody by surprise. And it's going to need to be on the levels of like Rona. And we just, there's so many damn things we've been through over the past couple years and 3 years that I even forget about some stuff. We just went through the regional banks all of a sudden going under. So, you know, I mean, the biggest bank failures we've seen since the great financial crisis, I forgot about that. We went through that this year as well. What haven't we been through? I mean, my gosh, okay?